Both presidential campaigns are in a mad sprint to the finish line.
Contender for the US presidency is now into its final hours.
The US elections are around the corner and the markets are already reacting nervously. Investors around the world are watching every move of the candidates as the outcome could have a major impact on the economy and the direction the markets will take. What does the presidential election mean for your portfolios? What sectors stand to gain and lose? Let's take a look at what analysts are predicting, how to prepare for potential risks and opportunities, or how markets have behaved after elections in the past. We will also look at individual sectors where the election of one candidate or the other could significantly affect their direction. Stocks from these may also be in your portfolios. Hi investors, this is Milan from 𝗕𝗂𝗶𝗀. None of the information in this video is investment recommendation. Always do your own detailed analysis. In the final days of the world's most important presidential election, the race for the presidency is still tight. Democratic nominee and current Vice President Kamala Harris and the Republican nominee, former President Donald Trump, continue to jostle for votes in both national polls and among the electorate. What is important in US elections, which differ significantly from those in Europe? It's the state-level vote, because the Electoral College decides the president based on the results of the national elections. At the same time, all 435 seats in the US House of Representatives are up for election. The House of Representatives is currently narrowly controlled by the Republicans, and a third of the 100 seats in the Senate, on the other hand, is narrowly controlled by the Democrats. While the dimensions of the presidential contest have changed since July, when Vice President Harris replaced Joe Biden as the head of the Democratic ticket, it is unclear what implications this might have for the next term, especially for the elections for the House of Representatives and the Senate, which will decide control of Congress. To this point, capital markets appear little affected by speculation about the election results. Could this change once the results are known after the elections on 5 November? According to Rob Howarth, Senior Director of Investment Strategy at US Bank Asset Management, for the equity markets to move significantly, we would need a significant win by one party, which means taking the presidency and both houses of Congress. Haworth goes on to say, more likely, however, is an impact at the individual sector level, where some sectors will benefit from a new head of state, while others may face a distressed environment. You can find more interesting videos that bring you the latest top stock market news on the 𝗕𝗂𝗶𝗀 channel, so subscribe and ring the bell so you don't miss the next video. For example, a Republican victory is likely to see more push for fossil fuel development, while a Democratic victory may further encourage renewable energy development. Let's take a look at how each sector might fare if any one candidate wins. Let's start with the energy sector, as one of the sectors that is not only heavily inflected but also likely to be the hardest hit. Trump's policies favor fossil fuels and support deregulation in the oil, gas, and coal industries. This could lead to an increase in new drilling projects and infrastructure development, which will benefit companies in traditional energy sectors. Given this possibility, the consensus is that oil prices will be lower. On the other hand, Kamala Harris supports renewable energy and electric vehicles. Together with the EU's efforts, companies that are in the renewable energy business could start to thrive globally. You can easily compare all the energy stocks, both the classic ones like Chevron and those that focus on green energy, using the octagon on 𝗕𝗂𝗋𝗈. Moving on to the financial sector, Donald Trump's focus on lower regulations and taxes could boost big banks and investment companies. This lighter regulatory environment could reduce compliance costs and stimulate capital markets. Big banks like JP Morgan and Bank of America could benefit. The reverse would be true if Harris, the opposing candidate, were to win, as she wants to push for stricter regulation and control, emphasizing consumer protection. Increased compliance requirements could increase operating costs for large financial institutions. Proposed tax increases on corporations and the wealthy could also affect profitability in this sector. Finally, technology. Trump's tough stance on China and his America First policy pose a risk to companies that depend on global supply chains or have strong business ties abroad. Tech firms like Apple, Google, and others may face higher tariffs on imported components and increased scrutiny over national security. If Harris were to win, her administration would likely encourage closer trade relations with Europe, which would have implications for the technology sector. Democrats generally favor cooperation with foreign partners, including the European Union, which could lead to harmonization of technology regulations such as data protection and antitrust. Overall, closer cooperation with Europe would present the technology sector with an opportunity for expansion, but at the cost of a higher regulatory burden. US. Bank investment strategists have studied market data over the past 75 years and identified patterns that repeat themselves during election cycles. The analysis points to minimal impact on financial market performance over the medium to long term based on potential election outcomes. The data also show that market returns are typically more dependent on economic and inflationary developments than on election outcomes. Elections are therefore important to us as investors, but they should not remain the only or even the main catalyst for our investment strategies. For another indication of where the markets could be headed in the months ahead, see the latest video in the form of the Buffett indicator, which is now warning investors of a possible washout.